Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everyone today. Today is Thursday, December 18th, 2025. And the title of our webinar is AI Unwind Continues. Now, we named these the evening before, so it's one of the perils of having to pick a title for a webinar the day before. So it is somewhat kind of passing. If I were to rename it now, if I had to, I would call it something about a wall of worry kind of continuing. However, I do think it's interesting to kind of realize that in some ways the data center unwind or data center weakness, the capex phase of the AI investing in terms of the stock market, that might actually be kind of fading. So those are my disclosures here. The standardized returns of some ETFs. You guys can see we might be talking about some of these. But I think it's interesting to kind of realize that we seem to be at a point now where the actual data center hardcore kind of hardware phase is maybe seeing some lagging. And there is some kind of shifting towards some of these other next stories for next year, like Tesla. And then also, I would say that as the new year begins, we do start to see very often laggards kind of playing catch up. So this time around, I would mention, for example, Amazon lagging, just kind of, sitting here at this kind of line, kind of watching a name like this. Microsoft also is trying to hold its 200-day moving average. I don't have it's on this screen, but there you can see, also these might be the places where people look now and the overall kind of we had these strong earnings from Micron, but look at Micron. It's not breaking out. It's kind of just sitting here, and it could be in this kind of range now. And I think when we look overall, we had recently took look at the semiconductor ETF, and we talked about the semiconductor index. We talked about the false breakout. You also have, if you have MACD on this chart, which we don't have, but MACD. It has bearish divergence. So basically, semiconductors, which have led this rally, are showing some signs of struggling here. And then we're seeing other areas, like in particular, I want to mention consumer discretionaries, which we talked about in our webinar on Monday. Consumer discretionaries, Tesla breaking out, Amazon, like I mentioned, retailers have been doing well. So I want to kind of point this out because, in my view, this is actually the way maybe the people are going to be thinking about things now, to be looking away from the chip makers in particular, like Broadcom and Nvidia. Those two are just kind of sitting, and they seem to be behaving like a source of funds where people have been kind of selling them, and they're sitting, and other stuff is going up. But Broadcom, Nvidia, just drifting here. And another one that looks like it might be kind of weak and people might want to just be aware of is advanced micro devices. But then if you look at other areas, you see Lam Research, you see Applied Materials. These have been faring a little bit better. They continue to be above their previous highs. This is kind of something people might see from a tech perspective. But for my thing, the thing that's grabbing my attention is the, consolidation of Tesla above its old highs. You can see Tesla consolidating back above its old, well, it's not exactly all highs, but these were weekly highs. It's, if it ends the week, this could be on pace for its highest weekly close ever. Look at things like that. Look at things like Microsoft coming off these lows here. Look at things like Alphabet, which have pulled back, and also a name like Meta, which here has essentially just kind of consolidated. And what's interesting about Meta is it's holding that 21-day exponential moving average, that 50-day coming down. But here's that gap from that last earnings report. And people might be looking for some of these things to be starting to work to the upside. So I wanted to kind of point that out. So if you look on tradestation.com and you go to insights, you go to market insights, we have a blog post. The blog post has some of the points we're going to be talking about. But like I said, a lot of these things, AI data center unwind continue as Oracle slides. Like I said, a lot of these things, I had to pick a title last night. And then what do we get? We got the strong Micron report. But perhaps more importantly, we got a very interesting inflation report today, which I think was very interesting. And we're going to get to it. But the first thing I'd say overall, I think it's kind of interesting is let's look at our key ETFs. Look in the last month or so, we can see that, technology has mostly lagged in the last month, the last 2 weeks. But look at how consumer discretionaries have really accelerated and had that breakout. That is interesting. And I think also what's interesting here is that we can really see in the last week or two that we saw things like utilities, which have that big connection to AI data centers, have been weak. There's been overall a period here where things like consumer staples have done better. things like materials. This is what we see when the breadth in the market improves. We see the RSP, which I don't have on this chart, but I'll quickly show you because it's important. Basically, if you look at RSP versus SPY, what we can see is now this is the equal weighted. When this outperforms SPY, it means people are buying other stuff. It means they're buying all those other names that people don't always, trade actively. It means that people are buying stuff like consumer staples and things like that, the more kind of boring names in the market that are not the leaders. And when this leads, it actually means breadth is improving. But what's interesting is that when breadth improves, it actually has not been a bullish sign. So you can see that in the last week or two, we've seen outperformance. In the last really 2 weeks to a month, basically an outperformance in the RSP. We've seen that, but then the overall, heavy the SPY has lagged. So what's interesting here is that we're now starting to see, I think, potentially with today's price action, if we look kind of um, potentially what's happening here with the large parts of the market coming back to life and leading today, like, for example, technology, consumer discretionaries. These are the large kind of leadership areas in the market. So I think what's interesting is that this is starting to show that we might have gone through a period now of value kind of, meltdown when everyone like gets out of tech and it gets very gloomy, very dark. Everyone is worried about the end of the AI trade and all that stuff, and we grind down, and then we get a reversal and the bearishness cannot continue. And that might be what we're seeing here. I think it's important to realize is that, we are at a spot where there are some signs of the market having peaked for a while. We have something of a double top on the S&P here. We are still seeing resistance at a level from back in at the end of October on the S&P. But the thing is that there has been this kind of negativity toward tech that we've seen in tech underperforming and in large caps underperforming. And today it does have some signs of being one of those kinds of, reversal relief rallies. And you see these things when the market goes through this pendulum, when it goes through this deep despair and nervousness about tech, and then it goes away. And so I think that's just important to kind of realize that there is something of that dynamic at play here. But I think it's interesting. There was an article, I think, on Market Watcher that basically said that according to a Deutsche Bank survey, the AI tech bubble is the biggest worry of investors going into next year. So again, wall of worry kind of taking shape here. So what I would just say, look at the S&P overall. I'm gonna look quickly at this chart, and these are the charts I use on our state of the market webinars. We have identified 67.75, and look at from my view here, this range was really the important thing to know about for the last 2 to 3 weeks. Basically, the range between 68.91 and 67.75. It was basically, you can kind of see it like that, and I just kind of fill it in, and anyway, you can kind of see that range there. And so from my view, this has really been the important sort of pattern that we've been in. And we broke down under it, but guess what? We came back today and we're back inside of it. Now we have the potential for this to be a kicker candle. And a kicker is when you have a breakdown that is immediately canceled or offset. And so this is something here where this could turn into a false breakdown. And even though we do have a lot of heaviness here, I'm going to actually, I'm just saying we have things like MACD are falling, RSI is falling, and you can see that we highlight in our article here that these oscillators have been weakening. And yes, you can say that we do have a period of intermediate term stalling and momentum here. That's true. And it's been true for the last few days. We have this kind of, 4-day meltdown. But now we're at a spot where the 4-day meltdown might have gotten rejected. Now, the other thing here is if you do a Fibonacci retracement, basically this was the Friday. And if we go from this Friday to this high, you can see that it's also, we're kind of holding a 50% retracement. We went under it for one day, failed to hold it. We have the level at 67.75 that we've been talking about for over a month now, which was the high on the November 14th, which was kind of like that mid-month kind of level. And here we are holding it. So from my view here, this is something where when you look at the overall situation of CPI coming down and strength in other areas, it might be something where people just, they don't feel good about it. They think it shouldn't be true. But then what happens is the strength continues. And I think this is what a wall of worry can kind of look like. Now, tomorrow is very busy. It's a quad witching day. and apparently there's a lot of activity, a lot of expirations and open interest. I'm not really sure what to make about it. I did want to mention that, and also. I think it's interesting to take a look very quickly at MTES. It's one of the other workspaces we share with you guys. Now, remember, at the top of our blog post, we have a zip file. In the zip file, there's a series of workspaces, and one of them is MTES. Now, this workspace basically shows the S&P 500 with an hourly chart of the cash index, which you can see here, and you can basically see this is that level 67.75 over there that we've been talking about. You can see very kind of clearly this has been the consolidation we've had. This is way back in early October when Trump was talking about more trade wars with China. We snapped back. We kind of had this ABC correction down. We held that level at 65.50. And what's interesting now is to see that we have something of a downtrend here that we've broken. That's the hourly of the cash. Now look on the futures. This is the key thing that we always emphasize, or we often emphasize with you guys, because it's one of the things that we share with you that is very interesting to think about, using for your own purposes. So this chart tells us the 50. Now this works on the futures index. What do we see? We see the 50-hour moving average falling, which is highlighted by this line down here, this histogram. When this solid thick line is red, it means that the 50-hour is falling. And then when you see stochastic overbought, that is a potential sell signal. And this has been something that I've seen that has worked very oftenly. It's correctly kind of worked for short-term futures trading. So what do we see? We see an hourly downtrend with an overbought condition. We had that sell signal yesterday. So it's kind of interesting. But now here it's interesting to take a look and see where we are. And basically we're at a spot where, yes, the stochastic went overbought, but see, now we're back above that 50-hour. And now if we turn that 50-hour to the upside and this thicker line down here turns green, this is something that could turn into the potential of an upward reversal here. I think if you look at this, you can see there is some rounding out here. And I think it's just important to kind of realize. So I wanted to kind of point that out. So look at the inflation report. Let me see if I can quickly bring up CPI. Just quickly do something here. I do Fred CPI shelter. But basically, this is very interesting. Wait, this one. This is shelter cost. Now we've been talking about this. Shelter is the biggest single part of CPI, and if you want to, if you want to be, simple about it, this is the main contributor because it's the biggest number, and it has been in a steady downtrend here for a while. So if you look at the percentage change from a year ago, this is now down to 3%. Now this data is messed up because of the government shutdown. It's actually missing. Interestingly, here this is only showing September, but the data for November, it's kind of funny. It's missing October or something. The key thing is it look at 3%. 3% would basically take us down to the lowest level since August of 2021. So with this, the lower this thing goes, this is something like 35% of CPI. As this moves lower, and we've seen a ton of anecdotal evidence that home prices are falling. We had sloppy earnings from Lennar. If you check out, I think it was Lennar, one of the home builders recently. One of the home builders this week reported, I think it was Lennar. Yeah, it was Lennar. Their report was like not what is good for Lennar, but why? Because prices under pressure. And we've been saying this. As existing homes come back onto market, these guys face massive competition. New home sales have dominated the market for a while since COVID, for the last 3 or 4 years. And now we're in this spot when existing is coming back on the market and the home builders are now facing competition with people who are basically cutting prices on their homes, have a lot of equity, who can afford to mark down if they need to move a house, and the home builders no longer have pricing power. So bad news for them, but it is consistent with what we're seeing of shelter costs going lower. So I think that's very interesting. Another thing, this is a random company, AJ Gallagher. They basically are an insurance brokerage, but they recently had some negative news. Look at the earnings. Look at this trending lower because insurance premiums are going lower. Well, that is part of core services and CPI. So just remember that. There's a lot of evidence of what's been happening with inflation, with things like shelter costs going down, insurance rates going down, and of course, energy going down. We've been talking about this. Oil, there's just more crude oil than you can shake a stick at. And, we are looking at a historic kind of inventory glut happening here. And you put those things together and you go out in the next year, Another thing I saw today, coffee prices hit the lowest level since August and things like that. So as I think we move into next year, we could be at a spot where a lot of these inflationary things diminish. Now, one thing that that's not true for is electricity costs. There was this thing called PJM. It's this network of electrical transmission lines, and somehow they're involved in the pricing of electricity. They had an auction or some kind of announcement yesterday that basically said electricity rates are going to keep going higher for a lot of Americans. So that's one thing going against it. The one thing though is that that's not part of core CPI, and it's not obviously not good for people. However, for the overall picture, shelter going down, crude oil going down, and other services like insurance going down, these are the sticky things that had to come down for inflation to come down. It's interesting was that today we saw apparel prices jumping up because some tariffs are still sneaking through into CPI. And that's an issue out there. Nonetheless, we just have to realize right now the big base effect of shelter dragging down inflation, which we've been waiting on for years now, is starting to really manifest itself. And I think we just have to realize that is that as we go into next year, we're looking at the potential of inflation going down because of shelter. We're looking at stimulus coming in because of different kinds of things with the tax thing and all that stuff. Americans getting more, money and things like that. And then we're also looking at earnings growth continuing to accelerate. So you put all those things together, and then we have to just realize we're in an environment now where there definitely are some risks out there. The government is, there are some issues, I think, with the long end of the yield curve, and the government is issuing so much debt and debt for data centers. However, we have to realize that some of the really important things, earnings and inflation, those areas are, I think, there's a lot to look forward to, and kind of think that it remains an overall positive. Now, I think what's interesting also is that, as you guys know, I've been talking about gold and silver for a long time here, and but I think it's also interesting to take a look at this. Look at the silver here, XAG USD on TradingView. With today's inflation report, silver should have been up. Should have, in air quotes, right? It should have been up. Gold should have been up. Interesting, right? It's not. The dollar index should have been down. The ECB had a meeting and they were hawkish. The Fed, well, we already know what the Fed, but CPI being low. Just think about this. I'm just saying, we have to realize here we might be getting to this point where a lot of that money, a lot of those news is now priced in for precious metals. And I want to also mention that there was an article, I think, on Market Watch. I can't remember where I read some of these things, but Wells Fargo and Spectrum Markets basically were saying that silver is at a spot when people might start taking profits. So I want to just kind of point that out. And so now as we look overall, I think some of the bigger things that I'm kind of seeing that's kind of interesting is that if you look in kind of inside the NASDAQ, let's go over here to MT Main. Let's go to Price Grid. Let's go to Data, Add Data, Symbol List, NASDAQ 100. I think it's kind of interesting that if we look kind of across the universe of things, look over here at key ETFs as well. Look at our industries. If we look at what's kind of leading today, look at software is starting to work here. Software, is up. Look at software versus chips. I like to just sometimes do this. Go down here, and we'll just do IGV versus SMH. I actually haven't done this one, but it's interesting to kind of look in the last month. But I think it's interesting to kind of see here. Software has definitely lagged over time, and chips are up. But I want to just kind of point this out. In the last week or two, there's been a bigger drawdown in semiconductors. And as we go into the new year, I think we got to realize that software here, it's interesting to see how it's made this higher low. And now look at Microsoft. Look at Salesforce.com, kind of having held with a good earnings report. Look at Palantir. A lot of these are in spots here where their short-term momentum is actually potentially more positive, and they have been lagging. I want to point this out because as we go into the new year, we've seen this before. There is, in my view, a little bit of a relative strength thing, value hunting, swinging toward software companies, and they're also swinging toward I think non-tech stocks, toward Tesla, toward Google, toward Meta. That seems to be a little bit of what we've been seeing here. So I want to just kind of mention that because as we look at what's kind of happening now, these are some of the patterns. People can say, you know what, I am worried about Oracle. I don't like all this data center spending. I think it's a bubble. And the fact is that that might all be true. And as those fears percolate and as scary things happen with Oracle, like happened yesterday when they couldn't get financing or allegedly, reportedly couldn't get financing for this data center, and you have a lot of negative things popping up on the data center front. Like there's this company called Fermi, FRMI, that was having issues with, some kind of tenant on a data center. There are kind of things out there that kind of make people worried. Well, you know what? What it could be happening here is when people go to Tesla, when they go to Google, when they go to Meta, when they go to Microsoft, they're not encountering those risks. And I think it's interesting even to see Micron with this really powerful earnings report. It did not break out. I think this is just telling us things that semiconductors for now they've done a lot. And this could be, as we enter a new year, especially a period when people look to the other areas, things like Microsoft and things that have lagged a bit. So I do want to mention that. Now, people looking at names like Broadcom, though, they might realize that a name like this, Broadcom, this might be something with this kind of line here that people basically look to see, for kind of selling put credit spreads. Can it kind of hold like the 320 area for a while and just chop around here? People might look for it to drive down to this gap a little. Just look for some of that kind of action down into this gap. I want to just kind of mention that as something that people might be a little bit focused on. Now, some other things that are kind of interesting is also Apple here. Look at Apple just kind of pulling back and holding the 50-day moving average. I think this is also a name people kind of, as we look to the new year, they don't have issues with data center over investment or anything like that. It's a good old fashioned iPhone upgrade cycle. It's had this kind of bleed to the downside, and here it is holding a level from basically, back, around November 20th. If you look here on this chart, I mean, you can see it's making a slightly higher low, and on the weekly time frame. So from my perspective here, this is some of the sort of things people might be kind of thinking about. Kind of it's a way for people to be looking for stuff without being, overly exposed to the issues happening with data centers. So I'm looking at all these sort of things that are kind of popping up now. Amazon also here, this falling trend line. People might want to look to see if it can break above this falling trend line. These are things you might want to look for some confirmation on. But the point is, if they do, there might be some potential for some follow through in some of these. Um, Now, another name that we've been talking about, one that I did want to mention, was T1 Energy. We had talked about the fact that this had this, it had this thing happening politically with JD Vance, and then it pulled back. And we had kind of talked about this level, how it came back and held this. And I want to just kind of mention that this might be also something people kind of pay some attention to. TE is a ticker on that. Another name that might be interesting for people to think about is Keysight. This company now is at a spot when it's just back trying to break out from its levels back in 2020, beginning of 2022. I want to just mention that had an interesting earnings report. And as things move forward, 6G is going, could very well become more of an issue. And this is a company in many ways that's focused on that next generation of Wi-Fi, which can have things with holograms or holographs, whatever they're called. So, I mean, at this point in time, that is going to be, I think, as we look out, I want to just kind of mention some of these other names have some things potentially happening. Um, you know, I'm going to go over this chart because on this chart you can actually see the Keltner channel of um, of Alphabet. Alphabet down at the bottom of that Keltner channel, I thought was kind of interesting as well. It's holding this level. But now I want to mention Tesla. It's a kind of an interesting one here. The Tesla daily chart. Here's the Tesla weekly chart. You can see there it is back on that weekly level against where it was in 2024. So there's this guy named Adam Jonas who's covered Tesla for a long time at Morgan Stanley, kind of well known. He's now left, or at least I don't know if he's left, but he's no longer covers Tesla. There's a new guy named Andrew Percoca, I think is his name, but he actually put out a note this week saying that he thinks Tesla is going to have 1,000 robo-taxis by the end of next year and then 1 million by 2035. Now, long-term projections, all of that. But I think it's important to realize is that Tesla is now evolving potentially into something else. And I think we have to just kind of realize that this breakout on the weekly chart, these things seem to be kind of coming together. Now, remember, Tesla will report deliveries beginning of January. Their earnings are going to be about a month from now on the 28th of January. So as things kind of evolve, I think it's kind of interesting. Another thing also is that Rivian, RIVN, remember this? People forget completely this stock even exists. They had some very interesting news this week. Now, the weekly chart on this one is very depressed. It's gone nowhere for years. But here it is, hitting a 52-week high this week. Basically, today it went to its highest level since late 24. It's above the level from where it was last July of 24. So this company now is announcing some new autonomy. They had an announcement, I think, on December 11th. They talked about this, and they have some chips, some new chips coming out. And some of the analysts made some very aggressive price target increases. So here we are at a spot where, if we have a new phase of the market to the upside, the last phase was spearheaded by NVIDIA and by Broadcom and names like that. Tesla hasn't really been a driver for a while. Now now it's at that level. Other sort of names. So I think we have to realize is that we could be simply looking at the beginnings of what is a different phase of the market. And if that is the case in the new year, a name like NVIDIA, it might be a source of funds for a while. It might, NVIDIA, Broadcom, most of the chips may struggle as people go to these other areas. I think that's important to kind of realize here. Those are the main things I wanted to cover. Let's take a quick look over here at our price grid and actually look at some of the things that are happening. I always like to take a look at this. Let's see who's making in the NASDAQ, who's making new highs today. Look at Marriott. Kind of funny. We talked about this one. We did a trading view idea on this. I forgot that's even in the NASDAQ, but it is kind of interesting. We can look at days since 52-week high. I like to go down here and say, let's look at all the companies that made a 52-week high in the last month. And I go at a label row, and then I just sort by who's down the most in the last 5 days. You can see obviously Broadcom. Look at things like Intel. I'm just looking at the list. I mean, the ones that do jump out to me here are things like, Alphabet pop up on that list. Interesting also to see a name like Analog Devices. Now, this name is somewhat similar to Micron. It's more of a kind of less advanced chip maker. And so I think that's just kind of important to kind of look at some of these sort of areas that are doing well. Interesting to take a look here at Cisco Systems. Look at how Cisco's holding here. Now, this stock is actually back to levels where literally it was back in March of, I don't even have it on this chart, it's so far back. This is back to levels from March 2000, the actual, first .com bubble. And so here we are, this company had a strong earnings report. It's been a forgotten name, and it's just now potentially breaking out. So I think this is also a down member. So again, here's a company that's been largely forgotten for a long time. But when you look at it, not that long ago, it was at the 100-day simple moving average. It's not that far above some of these longer term moving averages. So this name has really not moved that much for a while. And this might be, sometimes these are the kind of names that you can see extend into a new year. They have a long basing kind of breakout after a period of not doing much. As the new year progresses, these are sometimes some of the names you'll look at. Now remember, we share these with you guys, this workspace. You can always get it from looking at the top of our blog post. Now, let me just look at anything else. You see Micron here. Let's take a look at some of these others. I mean, I've talked a bit about some of the healthcare names, some of the pharma names. I mean, those are also names that have lagged for a while. IDXX. Look at names like Gilead, GILD. They've all kind of pulled back here, and they're near highs, and they've kind of pulled back. So these are also kind of, big names. I want to just kind of point out, looking through some of these lists like this, as we go to the new year, some of these other sort of, names might be the thing where people kind of look. So those are the main things I wanted to talk about. Let's take one last look, turn over here and let's go back to our S&P and kind of see where we are. And here we are still trying to hold 67.75 or 67.80. So like I said, this level here is pretty interesting. But aside from that level itself, people are probably going to be watching things like over here, let's go to this chart real quick. The 50-day simple moving average, which right now today is at 67.65. So some people might be watching the 67.65 level. Also, the 50% retracement is at 67.55, of this move. So anywhere between 67.55 to 67.75, that area in there could be the spot people are kind of watching. But I do think it's interesting to see this pattern. This big dark candlestick, this big thick candlestick yesterday might turn into a false breakdown, and there is some potential now. So we had mentioned the risk of us getting sucked back down into the range, and it happened. It happened on an intraday basis. It happened with the close yesterday. But now the big news event has happened, and people can look out. And I mean, you really have to wonder, how. I mean, there's a lot of people saying the CPI report is kind of bogus. You shouldn't pay attention to it. But the reason why I give it a little more credence is the fact that it's based on trends that are known, which is CPI, which is shelter. That to me is really the key thing. So it gives a little more credibility maybe to this inflation, the idea of inflation coming down. So I hope everyone has a great day, a Merry Christmas, a Happy New Year. We'll be back in January, the first Monday of the first full week, not the week of New Year's, but the week after New Year's. We'll be back doing State of the Market, 2 p.m. Eastern. Hope everyone has a great holiday season, and I'll see you in 2026.